about candlestick patterns. In this episode, we are going to learn about a candlestick pattern called Morningstar. I oftenly trade using this pattern because this pattern occurs very frequently. If you can see here, Morningstar occurs when there is a good enough red candle, and between there is a small candle, the middle small candle does not have to be green always, it can be of any color. As this is a bullish pattern, it is preferred that it is a green candle. Even if it's a red candle, it doesn't really matter a lot, but we prefer it to be green. The next green candle should close above the 50% mark of the previous red candle, the previous big red candle. If it closes below the 50% mark, then you should probably ignore it. But the bigger the green candle, the higher the bigger the green candle, the stronger the pattern becomes. If it closes above 50% of the red candle, it is a very good pattern. If it closes above the red candle, it is again a very strong pattern. There are a few things that you need to take care like before entering the trade, like all the patterns. First, there should be a downtrend going on. Next, the entry. You should take an entry when a green candle closes above the high of any of these two big candles. The entry should be within two to three candles. Your target would be a next immediate resistance, and your stop loss would be the middle candle's low. We will look into an example. If you see here, this is a chart of BPCL. There was a good downtrend going on, and over here there is a good Morningstar being formed, and it took the price from 340s to 390s. This is Morningstar for you. I will come back with another candlestick pattern in the next video. Till then, take care and cheers.